Good morning, folks. This is Amazon Chief Market Analyst at AvaTrade, and welcome to our daily update on our YouTube channel. As always, before we begin, it is important for me to do a bit of a housekeeping, which is anything which will be discussed in this particular video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, guys, if you haven't subscribed to our channel, there may be no harm to just smash that like button and subscription button, because by doing that, it will give you an opportunity to get all the news right straight on your terminal. So the question really is, where are the markets? Are we trading to the upside or to the downside? And more importantly, where are we going forward from here? Well, when we look at the European markets, I see pretty much green is a green color across all the European indices. And by that, I mean the DAX, the Stock 600, the CAC, the FTSE, MIB, and of course the FTSE 100 index as well. But as far as it goes for the US futures, such as the Dow Jones Industrial Average, over there we are also seeing green ticks coming as well, because both the Dow Jones and the S&P 500 index, that their futures are trading to the upside. Now, of course, the question really is that why are we seeing those uptakes? What has really driven those upward momentums? Well, again, it is very much the message from the Federal Reserve Chairman Jerome Powell, because remember, he was speaking yesterday and he said once again that, look, we will taper well before considering raising rates. Again, this is not something new, because we have seen a similar sort of message back during the financial crisis when the Federal Reserve started to taper. They did exactly the same thing at the time as well, because tapering started to happen well before in rise of interest rate. If I remember it correctly, it was nearly about over a year difference between the tapering process and, of course, the interest rate process as well. And we are likely to see it very much the same as well. But one important aspect which we really need to pay attention to, what in relation to what Jerome Powell just said yesterday, the chairman said that economy is very much at an inflection point, meaning he sounded quite upbeat about the economy, about the economic recovery, about the economic activity, about the economic data, and that is sort of a small bit of a clue that, look, the Federal Reserve, which once used to say that, okay, look, we haven't seen that sort of a recovery that we were expecting, and or there is still a long way to go. That tone has started to change a little bit, and that is something we really kind of need to pay attention to. Now, of course, we are seeing no evidence of that in the dollar index, because the dollar index is still trading to the downside. And in the currency market, we are still seeing the euro trading to the upside against the dollar, and of course the sterling as well. Remember, speaking of euro dollar, the euro dollar did cross that 1.20 price level yesterday, which we mentioned. And now, moving away from all of this and then focusing on earnings, it is all about Bank of America and the other banks, and their earnings were going to be very much in focus. Bank of America has already come out with a very, very, very strong number. The pre-market stock is literally up by over 1.25%, while over trading well over $40 yesterday. The close price was in around $39. So again, the message which we saw from Goldman Sachs, JP Morgan, Wells Fargo is still very much in line with Bank of America as well, and that is that these banks are producing more earnings in terms of their trading, in terms of the other part of the business. However, one particular area of their business which hasn't seen much growth is the loan. And now this is quite alarming, and let me explain it to you guys why this is so alarming. The reason I think this is quite alarming is because we had a massive stimulus support for Americans, and of course, because of them staying at home, they have also been able to get a lot of savings. But when we see loan growth, we are not seeing that, and that is a sort of an indicator that, look, we need to be a bit more cautious about what happened in the second quarter as the economy begins to open. and we see much more stronger economic activity, will we see more loan growth? So that is something where we have to be very, very careful on. Now, of course, as the title goes about Coinbase, yesterday it was nothing but about Coinbase IPO. Everyone was talking about it because the day before the IPO, the Nasdaq gave an indication price of 250, and yesterday the stock price went all the way above $400 to nearly $418. But of course, we saw a massive sell off after that, and the stock did move to the downside and closed at $328. Nonetheless, that's still a whopping 31% gain from the previous numbers, and that is something that we really need to pay attention to. But overall, if I look at the Coinbase stock price today, pre-market, I can see that the shares are once again trading to the upside, and we are expecting another upward move in Coinbase, with the stock price. Now, moving into our commodities area, and by that I really mean by what is happening in relation to gold price. So when we look at gold price, we are seeing bulls really trying and breaking the price above the 50-day simple moving average. This is certainly very, very a positive sign, because we want the price to stay above the 50-day simple moving average on the daily time frame. Only that will tell us that the prices are going to continue to move to the upside. Now, as for crude oil, of course, we've seen those massive gains for crude oil yesterday on the back of the crude inventory data. Now the prices have crossed above the 50-day simple moving average, which is quite positive. And now it's very likely that the current price action, which is trading in around 62, can continue its journey towards that 66 price level. All right, that's all for today from my side, and I'll see you guys same time, same place tomorrow. That's all for now. See you later.